a little. We're now down 500 there. We had been down 800. And look who's here. Mike Lee is back, and a particularly good day for him. He's always been called the Super Bull. All right, Mike, welcome back. What does a Super Bowl do on a day like this?
Well, look, as super bullish as I am, I'm really happy I didn't sell all of my gold, all of my 30-year treasury, TLT, and get rid of all my cash, because it really looks good in days like this. So I think if you've missed this AI rally, if you were afraid to buy Microsoft because it was too high, if you're afraid to buy Google or NVIDIA, today is your day. If you've been sitting in cash, you've missed this. This is an excellent opportunity, because what has caused the sell-off is a breakup of the carry trade. So the Japanese central bank raised interest rates last year. All these currency traders and hedge funds all over the world that were borrowing yen to invest in other currencies at higher interest rates, that trade has blown up, and these are leverage trades through futures, and that unwind gets uglier and uglier and uglier. We've had no fundamental economic changes in the last 3 weeks to cause this sell-off.
So we will have a rebound at some point in the near future, will we?
I believe so. It could, ideally it happens quickly, but it's typically the way down is much quicker. You're the elevator down, and either the stairs or the escalator up, and that's because when the volatility spikes, when the market goes down. So the VIX, everyone looks at the VIX. VIX is just to measure a correlation, and when the market starts selling off, people start to panic. When the market rallies, I don't know anybody that panics except for short sellers, right?
True. Right.
But generally, it's a lot more orderly on the way up than it is on the way down. So it takes time to come back. And I think what we saw today is a short-lived. There may be some more washout, but we would need a large financial institution or something structural to break to get this emergency rate cut, which I don't know that we're going to see. But I think 50 basis points is becoming a much greater probability September. And
you're comfortable with that? 50 basis points in September, not a big cut now.
Well, if nothing else breaks, if something breaks, then yes, the Fed should come out. But we haven't seen a large credit event. Nothing's, it's only levered up crypto funds that are getting, that are breaking right now, which is not worthy of a Fed cut. So if we get 50 basis points in 6 weeks versus a week, I don't know that makes that big a difference. And if we're going to get 25 before the election, before this, and 25 after the election, what difference does 50 in September make? So I think the course is almost written in stone, and you can move these puzzle pieces just a little bit. But today's an opportunity to buy.
Harris is looking reasonably strong in the election. Does the politics have anything to do with this sell-off on Wall Street?
Yeah, look, as soon as we got the hype of Harris, and August is historically a very good month for Democrats in polling, because Democrats are a lot more likely to answer the phone. When big news happens for your candidate, you also get a massive response bias in the polls. So people that like Kamala Harris are super pumped to answer polls right now, and that skews the results. Once the dust settles, like sometime in mid-September, and they realize that Kamala Harris's path to victory is extraordinarily narrow, then I think we'll be back off to the races.
Got it. Mike Lee, thanks for coming in today. Always
Thank you so much.
Thanks so much. Let's do a